Financial argument. Follow us on YouTube.
Let's get into the economic collapse financial news. Now, looking at the stock market, looking at gold, we see the stock market was down today. We see that gold is trying to inch its way back up after the suppression that the U.S. government central bankers have placed on the precious metal market. And something very interesting with all those people that are on food stamps, the EBT cards, it has been 8 days into June that still many Americans have not received their food stamp money. And there's widespread reports about this, that there's some type of glitch with the food stamp system. And many of the people, of course, as we know, can't survive without the government money. And we don't know why this is occurring at this point in time. It could be some type of glitch. It could be some type of malware. It could be the government maybe not having the ability to pay this. We don't know at this point. But this should show us something, that if we are in some type of economic collapse scenario, which we know we're headed into, the government will not have the ability to pay certain things. And all those people that are depending on this, they might have to figure something else out. And when we talk about the economic collapse, we realize that many of the people that are depending, who can't get food any other way, who haven't been prepping, they might become desperate. And I'm not saying these are bad people. I'm not saying these are the people that you should be afraid of, but it could be anyone, not just people on EBT. It could be people that are just going about their business, working every single day at their job. All of a sudden, everything comes to a screeching halt. They get laid off. There is no unemployment insurance. They don't know what to do. The dollar is devaluing. They're running around trying to find food. They become desperate. They don't know what to do with their family. And people resort to other methods. And this is not something that's just being made up. We have seen this in other countries. I mean, take, for example, Venezuela. We see people standing online for a supermarket and people rushing and fighting over meat. We see it here in the United States during the Christmas holiday when everyone's supposed to be happy, joyful. As soon as Walmart opens their door, people are running in, stepping on people, punching people to get a good deal on some piece of electronic or other device. But with this EBT system, we see the Down Detector, which is downdetector.com. It has reported that the U.S. government has had over 2,700 reports of being down or late loading money onto the EBT cards. So this is something that we need to watch very carefully and look at this problem, because as we move forward, we're going to see a lot more of this. Now, wholesale inventories, they rose more than expected in April. They're up by 0.6% month on month. This is the biggest monthly jump in 10 months. But sales, they have disappointed, rising only about 1.0%, and they expected about 1.1% increase. But when we look at the inventory to sales ratio, it remains at 1.35 times. This is the highest level since Lehman. And inventories keep building, even though sales are declining year over year, which is a concern because we've seen this once before. We've seen this during the Great Recession of 2008, and we're headed right into that area. Now, everyone talks about growth and how the central banks can create growth by spreading more debt. Well, when we look at growth and we look at debt, we see the first quarter of this year, it cost $10 in new debt to generate $1 in new economic growth. And when we look over time, showing credit versus GDP since 1950, we see the trend, it doesn't look good. Because we see the amount of debt rising very, very rapidly, GDP not really going anywhere. And this is why the central banker system, with all of this debt, is never, ever going to work. And actually, when you look at the graph and you go back to 1971, this is when it started to separate, when we came off the gold standard and the central bank started to print currency out of thin air as much as they wanted. And as we move through the 80s and 90s, it separated even more. When we hit 2014 going forward, it is at its widest point, and we've never seen it wider than this since going all the way back to the 50s. Now, we hear a lot about the U.S. government, the central bankers, how they're trying to convince us that unemployment is down at 4.7%, how we're in full recovery, everything is fine, don't worry about it, you have to believe us. And we've been looking at the job numbers, and we've been looking at retail, we've been looking at all the economic sectors, and we keep countering what the U.S. government central bankers have been saying. And one other indicator that has come out is the U.S. federal personal tax receipts. And this is a very good indicator because it shows us that people either have very low paying jobs, which are part-time jobs, or no jobs at all. And these tax receipts, they are falling fast. So is the Evercore ISI State Tax Survey. The last time, actually the last two times, the survey plunged this much, the U.S. was already in a recession. Now, what's very interesting about this, you would think that as the government continually comes out and says, you know, we're at unemployment at 9%, we're at unemployment at 8%, we're at unemployment at 7, 6, 5, here we are at 4.7%, we would see the tax receipts increase, wouldn't you? More people are working, more people are making money, more taxes are coming into the government. Well, we actually see the opposite, which is a head scratcher. Why would that be? So let's put all this together here. We see tax receipts falling as unemployment is dropping. The percentage of unemployed people, it continually drops. Makes no sense. We see the unemployment rate continually drop, and we see retail contracting. As the unemployment number continually drops, CEOs of retail stores are saying their sales are declining. Very interesting. As the unemployment rate drops, we see GDP declining. As the unemployment rate drops, we see the production of manufactured goods dropping. As unemployment decreases, we see the service sector decline. There's something wrong here. The statistical information which is being produced by the government and the central bank makes no sense. Because what they're telling us, we should see the opposite happening. Actually, we should see incredible revenue coming into the government. We should see it increasing over time. But when we look at the information, we see the opposite happening. And actually, we saw this back in 2008. When people started to lose their jobs and they were laid off, like we've been seeing here in 2015, 2016, the tax receipts plunged. And going into 2009 to 2010, they were at their lowest point. Well, we've hit that point right now where the economy is already in a recession when we hit this point, and we're at it right now. So we're already in a recession heading towards a collapse. So we can see right now the president is continually lying to the people. Actually, he's the one peddling this fiction once again, because everything that comes out of the government is always the opposite. If they tell you the economy's doing well, you better prepare yourself, because it's not. If they're telling you that Obamacare is going to be affordable, guess what? Absolutely not. Patriot Act, opposite. USA Freedom Act, opposite. No boots on the ground, opposite. We're not going to put boots into Syria, the opposite. It is always the opposite of what they say. Now, out in Japan, we see that Japan's second quarter is off to a disastrous start as machinery orders crashed by 11% month on month in April. And this is the worst start since April of 2009. And it looks like Japan might be going into the 7th recessionary GDP since the crisis. And this does not look good. Something very interesting coming out of Mervyn King, former governor of the Bank of England. And he believes that in certain circumstances, China's assets in the U.S. could be annulled. The U.S. would not want to renege on its debt, but if some awful instance should happen, China's assets in the U.S., there's a good possibility that they could be annulled. Now, the choice of the word annulled suggests some kind of deliberate action. And under what scenario could this happen? Well, it could be maybe war. If the U.S. gets into war with China, the U.S. could turn around and say, okay, we're going to cancel the treasuries that China owns. We're not going to repay. And all of the assets that China owns, we're going to take. And this is a strong possibility. Now, Deutsche Bank, they are out there and they are continually warning about social unrest and another Great Depression heading our way. And it seems like they're continually out there letting everyone know that, yes, something bad is on the horizon. And we can see at this point, from everything that we've been looking at, that this economy, I don't think it's going to last that much longer. From everything that we've been looking at and all the indicators that we've been seeing, we see the U.S. government central bankers, as they continually come out and tell us that the economy is doing fine, and as they continually push the stock market up to all-time new highs, they're making a last-ditch effort at this time to convince everyone that everything is fine. Now, we've seen this before. Back in 1929, right before everything came crashing down, everyone thought, oh look, the market's back up, everything is fine, nothing to worry about, and then all of a sudden, everything came to a screeching halt. We saw this back in 2008. Everyone said it was contained, everything is fine, the market soared back up a little bit, and then all of a sudden, it crashed heavily. And it looks like we are going to see the same exact thing happen once again. And this is why everyone at this point should be ramping up their preps. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.